Kroger is one Warren Buffett stock that I think you might regret not buying on this 24% dip here. Why do I think that's the case? Well, that's what I'm going to talk about in this video here. So let's begin. Starting with Kroger's excellent revenue growth over the last 10 years. It's boosted its revenue from a little less than 100 billion all the way up to 148.26 billion. That's nice revenue growth. It's not explosive, but it's certainly nice, especially when you consider the level of revenue, right? 148 billion is a big number for a grocery company essentially. So um, that is crucial because of this next metric I'm going to show here is the operating profit margin. So Kroger operates on very thin margins. It relies on the scale of revenue to generate a lot of operating profit. So thin margins, but a lot of turnover to get you a lot of operating profits. Now, the operating profitability had been falling all the way until 2022, I would say, and then it's on the rise again, and operating profit margin jumped from about 1.7% up to 2.78% in its most recent trailing 12 months. And the key here, I will highlight that Kroger is benefiting from consumer behavior right now. So inflation is causing items that consumers pay at the grocery store to increase in price. So consumers are more often now looking to trade down. And that's crucial for Kroger because Kroger has a lot of store brand items like Kroger is the store brand item. So if you're thinking about, buying a pack of bacon, you could buy the name brand pack of bacon for $5, or you could maybe buy the Kroger brand for, $3.75 or whatever it might be. The Kroger brand is typically the lower priced option compared to the rival brand, the name brand that's on the store shelf. So with inflation pinching consumer budgets, more often they are choosing to trade down to buy the store brand. And we're hearing this from commentary from management across the board, especially the biggest retailer in the world, Walmart, has said that they're seeing this more often now. Consumers trading down from name brand items to store brand items to save more money to get more bang for their buck. And this is going to be good news for Kroger as long as inflation continues to be persistent. So with Kroger, you're getting this benefit from changing consumer behavior, but also as an investor, you're getting this, a degree of inflation protection because if inflation surges, then Kroger could continue to benefit from that consumer trade down behavior where they'll look to find the better priced option. So you're getting, and now it's not complete inflation protection, but you're getting a degree of it. You're getting a degree of inflation protection. And if you got a portfolio of other stocks that also provide some inflation protection, you can protect yourself against inflation overall, the detrimental effects of inflation overall by having some of these types of stocks in your portfolio. All right, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And then the final reason I'm going to give for why I think you might regret not buying this Warren Buffett stock on the dip is because of the reasonable valuation. Kroger is trading at a forward price to earnings ratio of 10.33, which is relatively inexpensive according to its own historical past, right? Looking back, it's on the lower end of the valuation it has traded for going back about a year and a half. And also compared to the average stock in the S&P 500, a forward price to earnings ratio of 10.33 is significantly less expensive than the average stock. Further, with the probability of recession increasing, stocks like Kroger are better positioned to protect investors from losses in valuation because consumers like I mentioned earlier, if consumers start losing their jobs, if consumers get demoted, if consumer incomes fall, they're going to look to save more money. They're going to look to trade down, and they're going to look to shop at the grocery store more often instead of eating out more often. So all of those reasons are beneficial to Kroger. Whereas if you're have your money in another investment, that's not going to be as well protected compared to Kroger. So for all those reasons, I think you might regret not buying this Warren Buffett stock on the dip here. All right, thank you so much for watching. I hope you've enjoyed this video. I've selected this other video that's popping up on your screen right now that I think you will enjoy. So please click on that and I'll see you over there. Thank you so much for watching.